up quite well, up about 0.5% for the Sensex and the Nifty, and the mid-cap index is up almost 0.8%. So the market is definitely rewarding a good set of numbers, especially from the likes of Crompton Consumer.
Not the banks. I mean, it's not that the banks are in the red, but they're off highs. You know, they were leading from the front. So we're seeing a lot of volatility in the Nifty bank. And I can understand because financial performance have been very divergent. SBI Cards gave us a bit of a shock, while HDFC Bank allayed fears. So yesterday we just played out Uday Kotak's soundbite, and he said that things look better than they looked in March when it looked terrifying, but he wouldn't call it a victory yet. So the iffiness is there in the finance stocks. They're still in the green, but they are off highs more distinctly. But the mid caps are charging on, and I think this is the third or fourth day that we are seeing a broader market participation.
Third day we are seeing that, and that's the
positive.
That's the positive, that this divergence which was getting bridged has happened with mid caps picking up rather than the large caps falling.
Okay. Now with that, we're going to speak about one sector about which we haven't spoken in a very long time. This is oil exploration. The oil exploration bid results are out. ONGC has bagged 7 of the 11 oil and gas exploration blocks offered for bidding in the latest licensing round, and Oil India has won the remaining 4 blocks. Joining us now is Mr. Chandrasekaran, Director Exploration and Development at Oil India, and Rajesh Srivastava, Director Exploration at ONGC. Gentlemen, good morning, and thank you very much indeed for joining us. Mr. Srivastava, if I may start with you, what does this mean in terms of capex? What is the timeline? Any color that you can give us? Okay, we'll get to Mr. Srivastava in a minute. We're still settling the sound lines. Mr. Chandrasekaran, exactly the same question to you, sir. Thank you for joining us. What is the timeline you're looking at, and what is the amount of money?
Good morning. See, this is the round number 5, and we have already got 21 blocks. So this round number 5, we have now got 4 blocks, and typically the exploration phase in this round is 3 years. So in the next 3 years, we would be spending roughly around $25 to $28 million in exploration of in these 4 blocks. These 4 blocks, 2 blocks are in Assam and 2 blocks are in Rajasthan. So basically, like when we look at Oil India, we are a company rooted in Northeast, basically, and we have been there since ages, maybe more than 150 years. And we are credited with the discovery of the first oil field in the entire Asia, that is Big Boy. But we have been not able to step out of Northeast for quite a long time. This OALP has given us a great opportunity. So we've been using this opportunity in the last couple of years. And we have, but our policy is to strengthen our position as the #1 operator in Northeast. That we have to do continuously. And we have a producing asset in Rajasthan, so we wanted to consolidate our position in Rajasthan as well. So the strategy is to consolidate our position and carry out, because these 2 basins are also...
You know, Mr. Chandrasekaran, we would really appreciate if you can give some numbers in terms of how much money. You know, the government also wants PSUs to spend on capex. So if you can give us some idea of what is the capex this year, next year, year after, including this project.
Yeah. So this year we would be spending roughly around 4,000 crores. We are striving to step it up, and maybe we want to increase it to close to around 6,000 crores. But half the year has already gone. But we have got on to the exploration on a big scale, and we are hopeful. But the next year is going to be a lot more. The spending is much more, and what we are planning was around 5,000 to 6,000 crores, but we are planning to step it up to 9,000 crores.
Okay, got that. In fact, just stay on. We have the management of ONGC as well, Rajesh Kumar Srivastava, who is the Director Exploration at ONGC, who joins in. Remember, ONGC as well has won 7 out of 11 oil and gas exploration blocks that were offered for bidding. Mr. Srivastava, if you can start by telling us what will the investment be in these 7 blocks, and what is the kind of exploration volumes that one should be looking forward to?
Yeah, so as my colleague Mr. Chandrasekaran has said,
Yeah.
ONGC being the national oil company has been mandated with one thing only, to cater to the energy security. And as a director exploration of this organization, great organization, my roles and responsibilities are to discover more so that it can be produced more. So first of all, we have to realize that to produce anything from ground, you have to discover it first. And there comes in the roles of exploration. Now, with reference to the role of exploration and the role of NOC, it is with a long-term vision of exploring all the basins, seeking for newer play that they should come into the play and give us some oil and gas, opening new areas, bringing in new concepts and all those kind of things.
Okay, you know, Mr. Srivastava, 1 minute, sir. Sir, 1
Yeah, I
minute.
am coming to that.
Sir, 1 minute,
Yeah.
sir. You know, the national mission and the security is a goal that is well taken. But look at the global gas prices and even crude for that matter. How profitable it is for you to do these explorations. Will the margins sustain?
Yeah, you are absolutely right. The question is, you discover it today to produce it tomorrow. And there is a lag time depending upon the circumstances, depending upon the logistics, depending upon the engineering design, depending upon the complexity of the reserves that are going to be produced. There is a considerable lag time. And this is when the oil and gas prices are down, it also brings in the related services in the market at a much lower rate. So this is the time period when you have to infuse your investment into exploration.
Okay.
And we know that India as a energy consumer, that demand is going to be there. So once if you take in equation of demand and supply in totality, these situations are going to improve, definitely going to improve.
Okay.
And
Mr.
energy requirement
Chandrasekaran,
is going to be there.
Sure. Mr. Chandrasekaran, you mentioned that there'll be a 4,000 crore capex that Oil India will be pumping into this exploration. I just want to understand, where will the funding, where will the money come from? Would this mean higher debt, and what is the debt on the books right now?
No, right now, as far as Oil India's books is concerned, except for the foreign investments, we are a debt-free company. Like for domestic exploration, the internal accruals do help us to do that. So we don't look at any borrowing for carrying out domestic exploration, because normally we log around 3,000 crores as profit every year. So this is going to be an exploration and development capex. So we are not looking at any borrowing for domestic exploration right now. Though the prices are low, there is a big challenge there. But however, we are not looking at any borrowing for domestic exploration right now. Yeah.
Okay, Mr. Srivastava, have you heard from the government on the new gas pricing formula and the changed bases? Any update?
Yeah, the new pricing scenario which the cabinet has just approved, that brings us to relatively in a comfortable position. Initially, from the industry perspective, the demand that we were requesting to government to consider was, as the gas-related projects were being challenged, so the amount that was asked from the government was somewhere around $4.2 per BTU. And right now, with all those policies which the positive policy government has decided in relation to gas pricing, I think we are going to be comfortable. It would be somewhere around 3.6 and 3.7. And yes, all other acreages where already the marketing freedom was given, especially for the NELP-related acreages, the coming project. So I think is going to be comfortable.
But you had also requested reduction in cess taxes and all the. Are they close to giving you anything?
I think those domains are much better if answered by
the CEO.
Expert in finances, and I would prefer to be question directed to me in relation to
exploration. All right, so we'll stick to the main topic, which is exploration. Mr. Chandrasekaran, I wanted your thoughts on how profitable this exploration would actually be, because prices, as we said, have been cut to the lowest level since 2014. Do you think this is a profitable time?
Hmm.
This is a time to be making profits in exploration, and what could the return on the project be?
Yeah, Mr. Srivastava just now said, see, one thing is very clear. The prices are going to be in this range for quite some time now. So, but that also tells us that the services would have to also, chip in, and the cost of the finding cost should come down because it's a collective
Exactly.
effort. It's not that the exploration is a risky venture, but the point is when the prices are low, the innovation sets in, and then there has to be a lot of cooperation, collaboration between the service companies and the exploration companies to bring the finding cost low. So then when you find oil and gas today, it takes anywhere between 3 to 5 years in the short term to bring those fields on production. So hence, I would say that we should continue doing intensive exploration so that at least the reserves are discovered, number one. And number two is the development cost should also become, it should be made viable, because we have to eventually transition to the RE and the other forms of
Yes,
energy.
that's what we would like.
So that's going to take maybe a few decades in India. Nevertheless, so this transition also has to be smooth.
Okay.
The demand is increasing, and in the 2050, we are talking about 2030. Also, we are talking about 400 million tons of consumption.
Okay.
So the transition has to be smooth.
Yeah, I take your point, sir. Just one word. I'm coming back to the renewable energy transition in India. But Mr. Chandrasekaran, the Bhagjan blowout, any estimate of losses that you are now able to pin down?
There are two kinds of losses. One is mainly the production loss, which is happening, which is the could be anywhere around 50 million cubic meters or something like that in the last 4 or 5 months.
Okay.
But this is very small, because this is I'm not undermining the loss, but the point is the total when you compare it to the total reserves of the field, this is a very small amount. But nevertheless, loss is a loss. And other than this, there have been a lot of other aspects like the rehabilitation of the local populace there and things like that. And there are it should be anywhere around 150 to 200 crores is what we estimate right now.
Got that. Mr. Chandra, yeah.
No, 1 minute. I wanted to ask both of you this question, but let me start with Mr. Srivastava. Can you give us an, you're our best place to answer how much of domestic gas India is able to produce, say, by 2030? What percentage of the nation's requirements, because now we are rather seriously dependent on global supplies. What is the percentage now, and what might it increase to in 2030? First you, Mr. Srivastava.
Yeah, as we know, our plan from shifting to major gas-based economy, and at a national perspective from 6% to 15%, that has been the target. Now, if we look at our ONGC's contribution in terms of gas percentage and all, in terms of global, I can give you about 0.9% of the global consumption demand we are producing right now. And in terms of India's energy requirement and its role, the major gas-based project is going to be on production. And through this, I think the rise that is expected is somewhere around 14 MMSCMD. And in long term, this would increase to, considering the oil and gas distribution, somewhere we see with reference to the results that we are targeting, it would be 30-70%. So 30% would be coming from the oil, and remaining 70% it will move into the gas. And considering that the contribution of ONGC to the national is roughly about 76% of the total domestic production, and if we inbuilt into this 30 and 70 and increase it to by 1.5 times, so that is the kind of range that we are thinking.
Okay, this 14 MMSCMD, where is it coming in? When is it coming in?
This would be related to the project which is being talked about. That would be KG 98/2. And we also know that this COVID situation and unprecedented situation, supply coming from Norway, Germany, and all those were constrained. So project is little bit delayed. And I think somewhere around in January, we are hoping, and the deadline is being still yet, that project is yet to be reviewed by the ministry in a near future. And we are interacting with all those involved in the fruition of this project.
Okay.
So somewhere in 21, I think, is going to start.
Okay, all
Of
right.
oil, and then 22 would be the gas.
Okay.
Gas would come later. Oil
First
would come
be oil.
later.
Okay.
Overall, for exploration, Mr. Chandrasekhar, your view on what is the capacity utilization right now, and what are you expecting, say, over the next 6 to 12 months?
6 to 12 months would be a very short term as far as the exploration thing is concerned, right? But nevertheless, it should be around, say, as far as Oil India is concerned, we should be talking about anywhere between 2,000 to 2,500 crores. But for the next 4 to 5 years, there is going to be a quantum jump in the exploration spend of Oil India, which is going to be roughly around 5,000 crores only for these OALP blocks, other than the exploration which is we carry on a normal basis in the nomination acreages and also the NELP acreages. So we are looking at around 3 to 3,500 crores every year over the next 4 to 5 years.
Okay, all right, gentlemen, thanks a lot for joining us and taking us through this whole exploration bidding process and how it could pan out over the next few years. Let's slip into a short break. Markets are still doing fine, 0.5% higher for the Sensex and the Nifty. On the other side of the break, R. Sri Krishna, the CEO of Hexaware Technologies, will join in to talk about their earnings. Stay with us.